You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. Time to commence operations on the old network for this week. A very different broadcast week on the network. We'll get to all that fun in a little bit. My name, of course, Mark Longo from the THG, OptionsInsider.com, as well as from the network upon which all of you fun options maniacs are just going to town out there these days. Hope you had a good weekend. Hope you're rested, recharged, raring to go for another trading week out there. A lot going on this week, listeners. A lot going on. As I mentioned last week, I will be traveling pretty much right after the crypto rundown today. I hop on a plane out there to Asheville, North Carolina, for the upcoming Options Industry Conference. Yes, that kicks off this week, so I will be setting up the Southern studio again this week to catch up with kind of everybody. A nice sampling of all the movers and shakers in the world of options out there. So it should be a fun time. So I will be back in time in the Chicago studio in time for Vol Views on Friday. We are going to also be doing episode 2. Henry and I will be doing Option Block live in the same room, which is fun, down in North Carolina this Thursday. So that should be kind of fun. We'll beam everybody else in as well, of course, through the magic of technology here. Of course, provided connectivity is good in the resort where we are down there. It's a big if, but so we will be coming at you later this week. You'll already heard, if you're on the pro side, you already heard Options Boot Camp for this week. Otherwise, you'll be getting it on demand later this week. Of course, if you want to join the pro, get all that early stuff, theoptionsinsider.com/pro, the place to go to learn more. Those folks are also going to get early access to all the stuff we have coming out of OIC, including all my great conversations with all the folks. Broad sampling. A lot of you have wanted us to talk to Robinhood about what's going on in the options world. Spoiler alert, we're going to do that this week, put their feet to the fire, talk about what's going on. What are they up to from an options perspective? How do they view this crazy options market? And a whole bunch of others. All the exchanges will be coming on. You name it. It should be a fun time in the world of options. You folks always like our content. Of course, if you can't make it to OIC, we also have you covered there. This is how much we like you folks. We go all the way down there. Very expensive conference to attend for everybody. We get all the panel audio exclusively for us. And then we give it all to you folks. So you guys can all listen to it. So if you can't make it to Asheville, or maybe you just wouldn't go to an options conference because you're not a professional, I get it. Then, hey, we have the panel there for you. In fact, right now, as we speak, our team is retweeting all the content and sharing the links to all the content from last year so you can catch up on everything you missed. We have all that panel audio going back over a decade now exclusively for us. So we are the home for all of that options industry conference panel content as well. So if you missed anything, you want to just check it out. I'm always amazed how many people download this stuff on, your traditional retail platforms. It's always fascinating to me. So a lot of great stuff there if you want to catch up. So if you can't make it to Asheville, we're kind of your voice in the room. So it should be a fun week out there. Speaking of fun, let's kick it off the way we are wont to do with a little bit of fun here on the show. We are joined on the Monday episode by the uncleest of Mikes, Mr. Uncle Mike TOSAW, as well as by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. A little bit of a changeroo. So no rock lobster today. It is the meatball instead. Gentlemen, get your hands on the buzzers. You're going to need them today. It's time for a little bit of 80s trivia. Here we go. All right, here we go. Today's one, I'm not lying to you. It's going to be challenging. If you know the answer, I will be very surprised. You can just guess. All right, here we go. As I mentioned, this week I am going down to the annual Options Industry Conference. It is the big gathering of, as it says, the entire options industry in one place. I won't tell you what year it is in terms of numbers, but this conference has been running for a while, and it did start in the 80s. So there you go. Bam. That's our question of the week. What year was the first ever Options Industry Conference, aka OIC? Go ahead, hands on the buzzers. Who's a brave man wants to chime in first? Go ahead. Buzz. All right, TOSAW, brave man, dive it in first. Take a swing at it. You got a 1 in 10 chance, right?
I'll go with a 1987.
Interesting, but no. Mark, can you swoop in for the steal? Your chances have just improved.
Yes. I am going to say 1984. It's the 40th anniversary.
Oh, close. Close. It was actually 1983. So yes, intriguing for all you folks. Yeah, it's been around for a while. This conference actually been going for a little bit. Back in 83, there were not many options exchanges to meet, so I'm not sure what they really did, but and not a lot of brokers really either. So yeah, it must have been an interesting, very small conference, probably in a conference room in one room somewhere. But interesting how it has grown and evolved. So no points this week. So you didn't do Andrew any good, but also no harm either. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Let's do it. Let's commence operations out here. Let's get to the meat of the business out here, which is, of course, the trading block, the portion of the show where we do just that. We break down what the heck is trading out there. And as we're kicking off the week, we're seeing another kind of optimistic, mildly optimistic start to the week. Pretty much as everything is up about 1/4 to 1/3 % out there across the board. Of course, we have a banger week for earnings on the docket. Quite a few big names you folks have actually heard of drop in this week. Of course, we also have something called the Fed. I'm not sure what it is, but that is popping off this week as well. Just when we thought, man, we could move past the Fed for a few minutes, they're right back in there saying, hey, don't forget about us. We are dominating all your waking thoughts in this freaking market these days. And then, of course, let's not forget our friends, small caps. They're bucking the trend. They're up not quite a full percent, but about 0.9% out there. So a little bit of a banger day in small caps. All that a long way around to saying vol is coming back off again. We're back below a 15 handle, listeners. 14 3/4 puts us down 1 3/4 points from where we were on the Thursday show. VVIX getting back into that territory where we just said a few weeks ago, man, when it gets down here, now maybe you want to pay attention. It is now at a 78. Can it keep going lower? Sure. Can it get to like a 75 or maybe a little bit lower? Sure. Can it hang out there for a little while? Sure. But if past is prologue, it tends not to, usually. Of course, we are heading into that summer period. Maybe we are getting into we're almost this week is May. I won't say the cliche, but you know what it is, listeners. So are we starting to head into that range? I don't know. Interesting. Down 9 points on the old VVIX. I got some, shall we say, out of the money UVXY that wouldn't be angry at that if that were to come to pass. VXX 1320 down about 0.8 of a point. UVXY, the aforementioned 31 3/4, down about 3 points from the Thursday show. SVIX 40.5 up 2 1/4, so back north of the 40 handle. And good old UVIX continuing its march to 0, 8.5. It was just 12 and something not too long ago, so it's down about 4 points in less than a week. So crazy week out here for UVIX, down 1.2 points from the Thursday show out there. All right, a lot to unpack. No winners this week, but we haven't had Mr. Meatball on the Monday show in a while. So we will start with him, sir. Mr. Meatball, what is catching your eye out there in an optimistic start to a big earnings and Fed week, sir?
Yeah, a little bit of a choppy day. It's interesting that the equal weight is outperforming the cap weighted today. RSP is up about 0.7%. Cap weighted is up about 0.25%. We're seeing strength in the Russell 2000, and the NASDAQ is a little bit soft. We got some real good strength out of Apple today. Some good news there. Obviously, Tesla is exploding. It's up 15% right now. On the soft side, after some really phenomenal earnings, Google pulling back a little bit. The one that I think is kind of interesting is Microsoft, because it's right back to $400 after popping after its earnings. Meta continuing its slow move lower, and NVIDIA taking a breather down a little bit today. But where we're seeing strength is in the industrials and in energy and utilities. XLU is up 1.4%. Consumer discretionary up 2.2%. XBI, the biotechs, they're having themselves a day up almost over 3%. But we're soft on the communication side. Financials are a little flat. Retail doesn't look great, but as a whole, mostly green today, but not in the places we're used to seeing it.
Yeah, Tesla, we'll get to that in a little bit. Obviously, Tesla bouncing nicely off that low heading into their earnings out there. And this is, you've mentioned that equal weighted S&P quite a few times recently. I know a lot of people have been talking about the narrow focus of the S&P lately, the Magnificent Seven. In light of that, are you starting to use the equal weight a little bit more in your analysis out there, sir?
Yeah, I mean, that's what I used to invest in, actually. I like it because it rebalances every quarter. Especially as the indexes get more and more top heavy, as the S&P and certainly the Qs are getting less and less a diversified product and more just a direct play on tech. So for like retirement and things like that I help people with, not people, but my sister, somebody like that, or myself or my kids. I'll throw it at RSP instead of into SPY, because I want the exposure, but I don't want so much exposure. I don't want 7 stocks being 30% of the portfolio. If I want more weighting there, that allows me to then just go and buy those names. So in a name like, if I'm using RSP, one of the problems with like SPY and more the Qs is if I want to go long Apple and I'm already long SPY, I'm Texas hedged. Or I want to go long NVIDIA, I'm Texas hedged. I want to go long Microsoft. So by using RSP, I'm dramatically reducing the weighting of those as a part of the index. And now I can go and systematically go long those names when I feel the need.
Yeah, that is a good point about being long SPY and then loading up on a bunch of these other tech names. You're right. You're just kind of doubling down, and maybe you don't want all that exposure out there, listeners. So intriguing stuff. Mr. Uncle Mike, what is catching your eye out there in this lead up to a big earnings and Fed week? And then B, what are your thoughts on the equal weighted versus, shall we say, traditional S&P and major indexes, sir?
Well, in terms of what's catching my eye, in addition to what Mark had said, Apple is definitely on the move today. It had that upgrade earlier today. So we had that. We also have a relatively quiet day for NVIDIA, down 9%, down 0.9% on the day. So there are definitely some individual names that are getting some movement on the day. There's a little bit of a bid being there's a little bit of a bid in bonds. Some buyers are there. Just looking at like IEF as well as LQD, the corporates, up roughly 0.4% on the day, which is nothing to sneeze at in the bond space. So we are getting some buyers. I'm curious to see how the reaction will be with the Fed not doing anything with rates, but we'll see what the bond market is. In years past, there have been times to where, well, the Fed hasn't raised rates, so the bond market just said the heck with them and raised rates themselves by the movement and the underlying products. So curious to see if we see something like that in reaction to the Fed and how they react to it. In terms of the equal weighting, as much as I hate to admit it, it's something that I do need to start going towards, just for the exact reasons of which you said. Now, typically with our higher net worth portfolios that we manage, we're in the individual stocks. So it's not much of an issue with it. A lot of times what we'll do is, let's say that we want, I'm just making up a number here, 90% of the portfolio, or 90% of the stock exposure is already set, and we need just a little bit of a filler. Well, let's give them some SPY or give them some Qs, or maybe we need a little bit more Russell or a little bit more mid cap. So maybe we'll go with some IWM or MDY or something like that. And so we'll use SPY along with that. The reason with which we do a lot of times is because the S&P has set the standard so much for so many years. For longer term investments, we don't use that a lot per se. Just like I said, we're using the individual stocks. Usually it's more of like a filler, but I agree. It's something that we need to look into a little bit more of for using something more equal weighted, because of the fact that you're absolutely right. When you have something that is so top heavy like it is right now, that you need to be aware of that. You need to make sure that we're doing the right things for people. But for the time being, it's not a major part of what we do in a lot of areas. So it is kind of one of the things to where we're always trying to get better. So let's see how we can get better with that. That's what we do.
It's also challenging from a money management perspective because you're not benchmarked against the equal weighted S&P, right? So it would be a little bit of a change of paradigm perhaps there as well. But interesting conversation as everyone is out there these days lamenting the just complete dominance of the quote unquote Magnificent Seven out there. Maybe something to consider, listeners, approaching a more equal weighted philosophy to your S&P exposure. And then you can pick your poison out there. If you want a little bit more Apple, maybe you want a dash of Amazon in addition or something like that, you can go out there and sprinkle that at your leisure out there. You're not forced into having this kind of allocation out there, which again, some people not liking that these days. Let's see if the market is liking this somewhat gently drifting start to the week. And the answer is, kind of a shoulder shrug out there, listeners. VIX right now, 340,000 contracts. As you'll recall, on Friday on vol views, we were already north of 500,000 out there. So not quite as robust as we were on Friday. But again, not nothing. It's not a $1.50 either. There is something going up out. Let's look really quickly. Let's just look for fun. The big dog out there in VIX today, 22,000 of the May 17. So going out a little bit of a ways. I thought we might have some weeklies lighting it up. So nope, May 17s followed by the July 25s, 20,000 of those. So that's 42,000 of your contracts out there today. July 25s, that's an interesting one as well. So that's it, 340 on the tape for VIX today. SPY also kind of light, 4.1. Let's re-rack it right now and see if they've caught up a little bit since we've been talking out there, listeners. About 4.2. So it's pretty much in the ballpark of where we expected. Usually expected to be around 4.3 this time of day. So a tenth off, not going to hold it against it in this era. We are coming up into the much dreaded May season. The ADV 8.41 million out there. The S 1.4 million on the tape right now. The ADV 3.25 million out there. IWM, they were moving a little bit today. Maybe they're putting up some numbers out there. And the answer is kinda. Nothing crazy. They got a ways to go. They want to hit their ADV today. They're at 530 right now. So they're outpacing VIX, but their ADV is also almost 1.5 million, 1.42 million out there. So they also have a much more sizable ADV to hit than VIX does right now. So it doesn't seem like they're going to make it, but hey, second half of the session, you never know what lies in store for us there. And the Qs also kind of light right now. Usually this time of day, especially with their new ADV that just crossed the 4 million level right now, 4.01 million to be precise in the Qs. They're at 1.8 million. They usually expect them to be about 2.2. They're one of the more reliable ones we talk about, 2.2 almost every day. SPY usually pretty reliable, around 4.3 million as well. The VIX can be anywhere, the other ones could be anywhere, but the Qs usually pretty steadfast, and today 1.8 million, so kind of light. They're on pace to maybe, if they turn it up, hit that 4 million, but we shall see. Let's get up to the single name, shall we? Is it a banger day out there? On the single name front? The answer is kinda. That's kind of damning it with faint praise. We start off pretty light, but then we get going. Once we get some momentum, listeners, the second half of our story, especially the top of our story, bit of a banger, but it starts off slow. So bear with me here, listeners. Number 10 today, only 177,000 contracts on the tape. It's good old softy, 177 on the tape. That's kind of a light day for Microsoft. As the meatball alluded to, they're kind of giving back some of that bloom they put on their rose last week. Off 5.25 right now, trading pretty much 401 even. The saga with them was kind of a topsy-turvy week last week. This time a week ago, they were trading close to 405, and then they kind of they got whopped down to about, looks like 390 before bouncing. Then, of course, coming out later with some stronger numbers, getting up to 421. So there was exactly 20 handles off that high right now on Thursday, and also about 11 handles above the low on Thursday as well. Thursday, a very active day out there in Microsoft last week. So kind of setting out in the middle of that range. Will it continue this downside momentum, or will the worm turn out there? We shall see. Number 9, Alphabet, also giving back a little over $5, about 5 1/3, about 3% for them, trading 166. 60, the saga for them as well. After everyone got spooked by Meta last week, Alphabet sold off to about 151. So they're still about 15 3/4 above that low, but they also shot up in the at least on Thursday to about 179. So they're about $13 off the high as well. So intriguing stuff for them. They've pretty much been gently drifting lower pretty much ever since. So even though we've had rallies in the broad markets ever since as well, both Microsoft and Alphabet continuing to gently, I emphasize gently, but still they're off 13 handles from the high. So they have been moving south. Number 8, AMD, 258,000. Now we're getting to more respectable volume. I'd expect that to kind of be the break-in level these days. But c'est la vie. You get what you get. 160 even, up about 2 2/3 today, or nearly about 1 2/3% out there for AMD. So a decent little day today, even though they did sell them off earlier down to 156 1/4. So they have bounced off their low out there today for AMD. Number 8, 258. Number 7, Intel, my old stomping grounds, featuring on the top 10 a little more these days. Interesting. Maybe a sign of the worm turning out there. A 31 1/3 right now, off about $0.50. The worm not moving in the right direction for Intel. The saga for them last week as well. They got up to about 35 1/4 on Thursday, right before their earnings. Then they took it on the chin. They sold off on Friday down to pretty close to here, about 31.20, before rebounding up to about 32 and change on Friday and kind of drifting and then coming back to where we are right now, 31.5. So still off their 1 week highs, at least, of about 35 1/4. Good for number 7, 260,000 contracts. Number 6, the artist formerly known as Facebook, also giving back today. Everyone's in a give back mode today, which is interesting because we're in a general light rally, but a lot of big names, they're being altruistic. They're giving some back. In this case, it's Meta giving off about 10 handles, 433 and about a half, off about 2 1/4%. The saga for them last week, listeners. They were feeling their oats up to 527. This is going all the way back. That's a month. That goes back to the 5th. On just last week, they were up to about 508 on last Wednesday. And then back before the earnings, they were at 493. Then we know what happened. They sold off, almost broke 400 in the wrong direction, then rebounded from there and are at 433 right now. Good for number 6, 264. So we're all the way at number 6, and we're just barely north of 250,000 contracts. So what am I saying about being a banger? Well, we'll find out. Number 5, Amazon. 385,000 contracts on the tape for them. They're also rallying today, up about $1. Back north of 180, 180.61. So if you like a little bit of Amazon, maybe that's a an optimistic sign for you. They got as low as 168.85 last Thursday in the great near-term sell-off when we were back below 5,000. Remember that, listeners, in the S&P? And then rallied right back. So that was a very short-lived sell-off for Amazon. They've pretty much been in rally-ho mode ever since. And continue today, number 5, 385,000. Number 4, SoFi. This name's kind of been all over the place of late. Today, 7.15, off about 3/4 of a buck, nearly 10% for them. Last week was an interesting week for them as well. They were about 7 1/3. That was their low on Thursday. And they rallied hard on Friday up to about 8.12 or so before giving up pretty much exactly a buck now. Now they're about 7.12. So fell off a cliff there today out there. Interesting. Obviously, earnings season, bad numbers for SoFi. Leaning on the stock today. Good for number 4, 5.99. So now we're starting to get into a more active territory. Number 3, the fruit company. We're just talking about them, man. Maybe the writing's on the wall for them. Maybe they're going to be hanging out in this 160 and below level. Rallying today, $5.50. So somebody out there has the temerity to upgrade Apple. Looks like it was Bernstein today out there. So they're going to be the ones who buck the trend out there. After everyone's saying, maybe the writing's on the wall for Apple. Nope. Bernstein says no. Stock popping hard. Apple bulls need a win. They've pretty much missed on everything this year so far. Up $5.50, or about 3.25% today out there. Good for number 3, 637,000 contracts out there. Numero due, you know what it is. It's NVIDIA, 653 for NVIDIA number 2. NVIDIA up about $2 out there. I won't go through the saga of them last week, but they got as low as looks like about 784, it looks like. So they're almost 100 handles north of that now. And again, good for actually a pretty light day for them, only 653,000 contracts on the tape. That means the big dog, just how big is it right now? First off, Tesla, it's freaking booming. 194, so they're threatening 200 again. Man, what a reversal from just, they were 143.25 this time a week ago. My goodness, 50 handles and change to the upside. 36.5% rally just in the past 5 days. We were just saying, man, 200 seems like maybe a distant memory for Tesla. And here they come. Nope. 3.59 million contracts. That's what I mean when Tesla blowing the doors off today. They got full self-driving approval, looks like, in China. So that's what they've been waiting for, apparently, because this name's popping and the options are. It's been a while since we've seen Tesla really hit these kind of numbers. They're usually at roughly half of this, maybe a little less. But yeah, blowing the doors off today, stock-wise and options-wise. What else is on the docket for us this week? This is a busy week from an earnings perspective. So even though I'm going to be down in the Southern studio this week, you have no excuse, listeners, for not paying attention to what's going on the earnings front this week. Banger week. Today, of course, SoFi, we mentioned. Paramount. We've been talking about them a lot lately on Options Oddities. Someone's been playing for the pop out there recently and missing quite a bit. Is it going to happen this week? I guess we'll find out. Para popping off today. PayPal tomorrow. Mickey D's, 3M, Starbucks, AMD, and Amazon tomorrow. Wednesday, Pfizer, Wingstop. I'm talking about them a lot. Marriott's, Qualcomm, DoorDash, CVS. Thursday, good old PTEN. We were just talking about them. 1 week to go, now less. $3 puts, at the money puts, we're trading for about 30 cents, so 10% of the value of the stock. We wanted to know if you folks were buyers or sellers of those last week, and you cannot make up your minds. You were pretty much exactly evenly split 50-50 the entire time on that poll, which again, I guess that's what makes a market. Also shows you maybe the bullish optimism for Peloton. Not quite there yet. Moderna, Apple on Thursday, Coinbase, and Square, and Friday we've got something called SIBO. Maybe you're familiar with them. Luckily for you folks, because we like you, we have earnings move results reports hot off the presses right before showtime for you folks. That's how much we like you folks out there. Pizza Vol, who knew? Domino's a pizza before the bell. Ticker symbol DPZ. Popping $30 or nearly 6% out there today. That's actually good because they were pricing in 5.4%. So they're pretty much in line with what this options market knew was coming out there. So apparently there's a little pizza vol to be found out there today. Go figure. A little bit of pizza vol out there. Always fun to see. Let's go on today, unless you want to really go into a DACO New Energy Corp, ticker symbol DQ. No, not Dairy Queen. They're popping off before the bell as well. But let's get beyond. Let's go out to later this week. Mickey D's tomorrow before the bell. 273 is where they were trading when we ran this report. They were pricing in 7 2/3. In the past, they moved 5 1/3. So, my goodness, 2 1/3 more dollars being slapped on there, Mickey D's. So they're pricing in a little bit of extra juice in Mickey D's. Is that merited? Well, I suppose we shall find out. You slinging Mickey? You don't get a lot of people writing in about Mickey D's. It's not really an options stalwart, but maybe this week that will change. Buffett's favorite, Coke, 61 3/4. They're tomorrow before the bell. They're pricing in $1.20. In the past, they moved 80 cents, so 50% more vol there. That's a heck of a lot for Coke. PayPal, 30th before the bell. 65, almost $66 is where they were trading. They're pricing in $5.50. In the past, they moved 6.13, so a little bit less juice, which is kind of interesting. AMD and Amazon both after the bell on the 30th as well. AMD 157 and about a half when we ran this report. They're pricing in 12 3/4. Get this, listeners. In the past, they've moved about 8.90. So not quite $4, but pretty close to it, worth of extra juice. So you're talking about 40-odd% increase. Again, AMD's been popping. All the chip names have been popping of late, so you can probably argue that it's merited, but still, that's a heck of a lot of juice. Amazon, same day, 179 2/3. They were pricing in about 13.40. In the past, they've moved about 13.40. So Amazon keeping things tight, right in line with what they've done historically, which is kind of interesting, but not the case in AMD. They are pricing in more juice. So if you like AMD, might be something to pay attention to. Maybe if you think it's overdone, maybe you like to harvest some premium, maybe you got an opportunity there. Or maybe you think it's too cheap and you want to load up on it. Starbucks, coffee vol, is there any? Let's find out. 88 1/4 was where they were trading when we ran this report. They're pricing in 5 1/4. In the past, they've moved about $4.50. So 75 cents more juice on top of a $4.50 straddle. That's saying something. There has been obviously a little bit of input price vol on the coffee front, so that's kind of interesting out there. Let's keep rolling out here. Man, so many names popping off. We could literally do an entire show on this list. And let's get to some of the highlights here, though. Let's go to DoorDash first after the bell. They're trading 132, pretty much even when we ran this report. They're pricing in $12.50. In the past, they moved $10. So fully 25% more vol slapped on there on DoorDash. That's kind of interesting. Carvana, we talked about them a lot of late. Mostly it was on oddities, and maybe I should say of late. It was probably in the last year or so. They were much cheaper than they are now. 84, almost $85. They were a lot cheaper when we talked about them last. They were pricing in $12.81. In the past, they moved $17.20. So they have cut a ton of juice off the top here. Wow. Carvana saying no vol to be found in the car market. I find that interesting given everything else we're hearing out there. Seems like a tumultuous time in the car market, but these Carvana numbers say no. eBay first after the bell, $52 even. They're pricing in $3. In the past, they moved exactly $3. So no joy to be found. Now, let's keep rolling. Man, there are so many listeners. Qualcomm first after the bell, 165 2/3 is where they were trading. They're pricing in $10.50. In the past, they moved about $10.40. So no real joy then, or I should say there, listeners. Patterson Energy P10 first after the bell, 11 1/4, pricing in $0.0025. In the past, they've moved about $0.50. We don't have Peloton in here, which is kind of interesting since they are popping off this week, and that's one I know a lot of people. I think it'll come up later. Moderna second before the bell, 108. They're pricing in $8.50. In the past, they've moved $7.50. Oh, man, there are so many listeners. Let's keep going. Let's see if we can find your favorite out there. Let's see. Shake Shack, that one of your favorites, listeners, second before the bell. 104.88 is where they're trading. They're pricing in $9.50. In the past, they've moved $9. If I sound like an auctioneer at this point, listeners, I'm trying to squeeze in as many as I can for you folks out here. Apple, the fruit company, second after the bell. 169 1/3. They're pricing in 6 2/3. In the past, they moved $5.30. So extra juice, given the fact that it's moving $5 today, you could probably argue that is merited out there. But interesting, Amazon, or I should say Apple's been an interesting one to watch of late. We were just talking about it last week, how maybe we thought not that long ago it was going to maybe revisit the 100 level, in which case that'd be an interesting level. But it doesn't seem like that's the case right now. You like it going into earnings, listeners? Coinbase, second after the bell. A lot of you use this as your proxy for the crypto market. 236 1/3. Oh my goodness, they're pricing in $25.31. In the past, they've moved $17.40. My goodness, you're talking nearly $8 worth of extra juice. Coinbase pricing in a banger. My goodness. Is it merited? I guess we'll find out. DraftKings, second after the bell. So a lot of names you folks might interact with popping off on the second. $43.13 is where they were trading. They're pricing in $4.14. In the past, they moved 4 3/4. So less juice, substantially less juice on DraftKings, which again is kind of interesting. That sector seems like it's constantly in flux out there. Man, so many. Let's keep going. SBUX, third before the bell, 178.40. They're pricing in 4 1/4. In the past, they've moved 3.82. I don't see everyone's favorite. The one we just talked about, I don't see him in here. I don't see Peloton. We'll have to rerun those numbers later on in the week. Maybe on the Thursday show. We better have them because it's popping off on Thursday, I do believe. So fascinating stuff out here. The season right now hanging out at 114%, if you are indeed curious. And of course, you're curious about some crazy trades. Let's get to it. A little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get wild. Let's talk about, you like the movie Avatar, listeners? Is that your favorite? Good old AVTR. That's a ticker symbol here, but we're not talking about Avatar. We're talking about AVTR Inc. This is the biotech. We talked about them before. It's been a while out here, listeners. Trading 24.16, up about 1/4 or about 1% today. On the year, decent year, up nearly $4. They were about 20 1/4 a year ago, so almost exactly $4, $3.95. And then their low came 17.15 right around Halloween. Ever since Halloween, they've been pretty much straight up. So it's been a good run, about $7 to the upside since Halloween. So you can't complain about that. Let's see what we found out here, Mr. Meatball, that was attractive or intriguing to us. All right, we noticed here, first we saw 18,270 of the May 23 puts going up mid-market for 15 cents. They were a dime at 20, and they came out and at 18,270. The stock was 24.09. That caught our eye. We thought, it's interesting. 23 level could be a hedge. It was much lower than that before. Could also be a bit of a premium harvest out there because we sent our Eye of Sauron back to look and didn't go up as a spread, but almost the exact same size went up again a little over an hour later, this time on the June weekly 23 puts. So the June expiring on the 7th, 23 puts going up on the bid for 25 cents, 18,160 times. It could be unrelated paper, but the fact that it's the exact same strike, almost the exact same size, going up a little over an hour later does give us some pause. Worth noting, the stock had rallied about 30 cents in the interim. It was 24.40. It was about 24.10 when the initial puts went up. So that opens the question now. Are they legging into a spread 1 hour apart, 18,000 contracts? That does seem like a bit of a dicey prospect, especially with the stock whipping around. Was someone inspired by the other print? Are they just doing a time stupid? The earnings aren't even in this. The earnings are on the 26th, so it's not like they're trying to collar around the earnings or anything like that. It just looks like a straight up, it's not a roll either. Both legs are opening. So your first blush would be maybe they're rolling the maze. Nope. Opening on both. So, Mr. Meatball, we have an interesting conundrum to kick things off out here in Avatar, aka Avantor. I'm curious, did you notice these two sizable put prints going up about an hour apart? And then B, what do you think they're doing? I think they're just legging into a time spread an hour apart?
Yeah, I mean, the sizing says probably. I was noticing this. I thought it might be a close and roll, but it doesn't look like it. I do notice that there's almost the exact same size on the 23s. So I believe what they were was short the 22.5 puts, and they're covering those by buying the cheap 23 put and then opening a new spread out in June. So I believe that is what they're although the June may actually be a close. Look at this. So the June matches up with some flow that was from, well, I mean, they traded 17,000 of these on Friday, Mark. So is this additive? I mean, we're gonna have to find out in the morning, but it's definitely curious. Is it just a new calendar spread that they're repositioning? Because these puts went up. The May puts that they're open on actually went up on the 17th. Those were definitely a sale. So I think they're just rolling more exposure back to that 23 strike, and they want to collect some premium there.
Yeah, I'm looking here. I see that print went up on Friday now. 17,354 of the exact same June 23 puts on the 7th, going up for the exact same price, 25 cents. So if they're closing, stock was exactly the same level too, 24.40. Maybe they're just getting the hell out of Dodge. Like they don't like it anymore.
Maybe they're just adding more because they're definitely covering the May. So the May is a cover. So maybe they're adding more. I'm not 100% certain.
There's no way they were able to buy those puts back for a scratch at 25. They're 25 cents bid out. There's no way that they bought them all back for the same, unless they have a very nice broker, which could be. They facilitated them on the bid. But yeah, this is a weird one, listeners, which is hence the name of the segment. They did up almost the exact same size for the exact same price on Friday. Very strange to see that next, unless they really liked them at this level, they decided they wanted to double down. That is certainly possible. They are doing a little bit more size today, so that is worth noting. So it looks like it's opening today. So yeah, a definite weird one. And again, none of it has anything to do with earnings. Now, it is a biotech, so that there's other rules of engagement out here. It could be FDA things going on or whatever. But yeah, something is afoot between now and June 7th, listeners. So something to keep an eye on out here in Avantor. Speaking of biotechs to keep an eye on, Mr. Meatball, have you heard of this name? Are you familiar with this Gilead, GILD? Did we not just talk about this a few days ago, you and I?
Yeah, we did. And it seems to have found a little bit of footing, pretty decent sized call overwrite. I think they're basically saying, I don't think it's going to rally that much, but I'm going to collect some premium on this while it's sitting here.
Yeah, so we talked about it on the Thursday show, listeners. Gilead, of course, ticker symbol GILD, GILD, biotech. We talked about a rare, sizable 1x2 put spread in May last week, listeners. It was a 66-62 1x2. They did it for 90 cents, paid $1.78 for the 66 puts, then sold 2 of the 62 puts for 44 cents. So again, it's a structure we like. We talk about it on oddies every now and then. We don't see it go up for size too often in these names, so worth noting when we point it out, or when we see it out there in some of these names. And then Gilead, like Mark mentioned, back on our radar today, maybe the same person deciding they want to really, they want to pay for that put spread, the 1x2 and then some, or it could be just someone else coming to play for size here in Gilead. Either way, listeners, they decided, Gilead, which is, again, a dicey prospect for any biotech. Gilead ain't going anywhere anytime soon. And they decided it's trading at around a 20 vol. We're going to harvest that right now. They came in and sold almost 15,000. So not quite the same size, but in the ballpark of what we were just talking about. 19 and a half vol is what it was. The stock was 66.49, 66.42 now, so it hasn't really budged. They blasted away at nearly 15,000, 14,910 of the June 67 half calls for $1.58. So that was 6 cents below the bid. So they had to stretch a little bit to get these filled out there. So if this was the same person, which I'm not saying they are because it's different months at the end of the day, it'd be weird to sell the June against the May. You'd probably want to see them line. People usually in the institutional side like to line these things up a little bit more. But it's possible. It is possible someone deciding, hey, we paid 90 cents. Let's sell this for $1.58, and then we're collecting money on this whole trade. Or it could be someone who's deciding, the next earnings isn't until August. This thing's going to sit here for a while. And so let's just collect, $1.60. What's $1.60 15,000 times amongst friends out here? Mr. Meatball, what are your thoughts on Gilead coming back this time with a size call overwrite, sir?
Yeah, like I said, I think they're not looking for huge upside, but they want some income against a long position. I don't hate it.
And you don't think this is the 1x2 guy saying, I want to make a credit out of this whole thing?
No, I don't. I think they're unrelated, if I had to guess.
That you're probably right. It is more fun if they are related, though. So I'm just going to leave that out there. It would be more fun. Sometimes the options world can be more fun. If everyone was just doing all the same stuff, that would be fun. All right, let's keep rolling. We know you folks like a little swing for the fences upside fun. So let's get out of here on that, listeners. Let's go out to MLCO Resorts and Entertainment Limited. This is a resort and casino name out of Hong Kong. And ticker symbol MLCO, MLCO, trading 660. They had their earnings call before the bell, looks like today. So market liking what they're hearing, up about $0.25, or about 4%. On the year, let's see, a rough year for Melco. A year ago was almost $14, so they're off about $7.15, or 52% on the year, even after today's little rally out there. So today's rally ain't going to do it. It's got a long way to go to dig out of this hole. Wow, a rough time here for Melco. But you know what, Mr. Meatball? Somebody out here appears to be saying, you know what? This beatdown on Melco Resorts, this is overdone. I won't stand for it anymore. I am going to buy the May 7 calls. Again, we're at 662 right now, listeners. The 7 calls expiring on the 3rd. So just this week. Hard to believe we're hitting May this week already. I still can't process that, but I guess on vol views I'll have to. I'll have to come to grips with it then. But yeah, the May 3rd call is expiring this Friday. On the 7 strike calls, they paid 20 cents. They lifted the offer, these bad boys. They were a nickel at 20 cents. They said, we'll pay 20 cents for all of them. 4,155 times. So far, they got as high as, let's see, 671 today. So they got a little closer, but the stock was 655 when they bought these. They need this stock to really pop. I don't know, Mr. Meatball, bottom fishing in Melco Resorts for this week, sir. What do you think?
You know, they love going after this. It does have earnings coming up. They're on the 30th. It's very China-centric, Melco. So, having a nice day today, maybe a little squeeze action in this one potentially. Gets a one more little push higher, and this trader is going to be in business.
Oh, you know what? I misspoke. It said earnings 8:30, but that was not today. That's coming up tomorrow. So they do still have earnings. That makes this trade make a little more sense then. Okay, you're paying 20 cents. Now you're kind of swinging for, if the earnings had already happened, what are you doing? But okay, I could see that then. You're getting your 1 week lottery ticket, trying to gamble on the earnings. It is a casino name. Makes a certain logic, I suppose. Let's see if Uncle Mike makes logic. Let's find out, shall we? A little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, the folks are waiting with bated breath. The floor is yours. What you got in store for us this week?
Well, going into a lot of market uncertainty in the near term with earnings, with interest rates, whatever the case may be, if you have some appreciated stocks, now might be the time to look at hedging them in some way, shape, or form. And 2 common ways with which you can consider doing them are a traditional collar and what I like to refer to as a knockout collar. Now, let's start off with the traditional collar first. Let's say you have a stock, it's appreciated in value. You don't really want to sell it, but you're just kind of concerned in the near term that it might pull back a little bit. But if you have to sell it, you want to sell it for a little bit more, of course. A collar might be something to think about. And so for the time frame, usually 1 to 2 months is something where you can look at a collar if you're looking for event risk, like an earnings announcement or something along those lines. So let's say that a stock is trading at $100 a share. It's up from 30, 50, 60, whatever, and it's at $100 a share. Well, a costless collar, something that won't cost you any money, that can actually protect a vast majority of your holdings, it's kind of intriguing when you think about it. But there's good and bad to it. First off, what is it? Well, if the stock's trading at 100 and you want to protect 95% of your holdings, you can buy a 95 put. Now, of course, those puts cost money. And that's the bad part about all hedging, is that it's not free. So a way with which you can protect against that and don't have to take on any premium risk or minimal premium risk would be to sell a 105 call for the same expiration. Now, it's never going to work out exactly, and a lot of times you might pay a little bit of a debit for it. Don't be a perfectionist trader. If you got to pay a little bit of a debit, it's not the end of the world, but you might get a little bit of a credit too. It just depends on the stock. And so what happens is that you own the stock. You sell the 105 call with the premium that you immediately get. You can use that premium to buy a 95 put. So now you're in a position to where if the stock does decrease significantly, that you're protected from 95 on down. You have the right to sell the stock at 95, even if it goes to 25. So you have that protection in place. Now, of course, the bad news is that you also have your upside capped. You sold the 105 call against it. So that means that any upside past 105, you don't get to be a part of. And you have to be prepared to sell it at 105 if called upon to do so. Are you ready to make that sale? Well, if you're not, you might not want to be doing a collar. You may want to just sell the stock to begin with, or you may want to just buy a put and pay money for the debit of it. There's a lot of thoughts that can go into it. Now, the second way with which to hedge, on both of these methods are things that we use at RCM for our client portfolios at times, is you can still sell the 105 covered call, but let's say that you like the stock at 100, you would love it at 95. If it went down to 95, you would just be ecstatic to buy it. Excuse me. Well, what you can do is you can sell the 105 call. You still have the upside capped off. But with this premium now, instead of buying a 95 put, you can then buy a 195 put spread. You buy the hundreds at the money, and then you go in turn and sell the 95 puts. The cost of the put spread a lot of times will be about the same as the covered call. So in other words, do you want 95% of the entire asset protected from 95 to 0? Or are you just concerned with a little bit of a pullback from like 100 to 94 or 95, something like that? If you're more concerned with just a little bit of a pullback, then I would suggest the second choice, what's called a knockout collar, meaning your protection is knocked out once you get below your short put. So both of them have a place in the world of hedging. It just depends on which one you are looking to do and where your risk tolerance level is. And that is the strategy block for the day. Last one of the month of April.
Now it's time for our last segment of the show. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on. And man, is it a jam-packed, event-full weekend out there. Of course, you got the Fed kind of looming over everything. Also, every big earnings name you could think of pretty much on the planet popping off this week. So a lot to keep an eye on. Of course, we will be heading down to the OIC conference this week as well. And that is our actual question of the week. We put it out to you folks. What do you think we should talk about down there? What should be our big focus down there? Gave you three choices and the infamous other. The impact of zero-day options, 24-hour option and stock trading. Everyone's talking about that these days. The overall options value, surge. Can that continue or other? A lot of you have already written. There was some interesting others out there. But I want to put it to my co-hosts out here this week. Because you all kind of know what everyone's keeping an eye on, I think, this week. But I'm curious for you folks, as I head down there to talk to all the movers and shakers in the options world, what would you like me to talk to them about? Mr. Meatball, we'll start with you, sir. What are the hot issues on your docket you want me to put their feet to the fire about, sir?
I want to know when they're going to list these Bitcoin ETF options and what the holdup is.
That could certainly be one. Yeah, I've heard differing things on that front. But I will make a note. I will make a note of that, sir, to put that question out there to people. And we mentioned the Fed earnings. Anything else you got on your radar for this week?
FOMC, non-farm payrolls on Friday, Apple earnings, Amazon earnings, and I think sneaky, super important are AMD. Pay attention to AMD because that's going to give you a real insight into what's going on in the chip sector for real.
Sneaky, super important AMD out there. Mr. Uncle Mike, same question for you. What would you like me to discuss with all the folks down there at OIC this week? And then B, what are you keeping an eye on? Are you also watching Stealth AMD? Do you perhaps have another surprise stealth pick in your back pocket you're keeping an eye on this week?
I don't have any other surprise stealth picks, so I'll just kind of mirror what Mark had said for what I'm watching this week. And I really don't have anything that is pressing, but just more out of curiosity, talk to him about zero DTEs on individual stocks. When are we getting that?
That will probably will probably come up, sir. Right now, winning our poll with exactly 75% of the respondents saying they want to talk about the impact of zero-day options. So that will definitely include what you're talking about there, Mr. Mark. Mr. Mike, I apologize. I will certainly put their feet to the fire on when we will see more of these much heralded, much anticipated zero DTE options, including in the single names. You hear a lot of different stuff about what is the holdup with that. We'll get to the bottom of that this week. 25% of you want to talk about 24-hour options and stock trading. And then some other interesting ones right in the end. Some people want to have some questions about, like Meatball said, about the Bitcoin ETF options, about what institutions are up to in light of all this zero-day flow. So get your ideas in. If they're intriguing, listeners, we will get them answered for you. That's what we do here on the network at the end of the day. But that is going to do it for this show. If you're waiting for Crypto Rundown, don't worry, that'll be back in a little bit. I do have to hop on a plane pretty soon, so it's going to be a Just the Facts, Ma'am Crypto Rundown coming at you a little bit earlier today. Then I'm off to beloved scenic Asheville. Hard to get there from here, I will say that. And I'll be down there all week until I'm back again on the Thursday show. But let's go around the horn. Actually, I'm not going to be back. I'm going to be still in Asheville. Back again on Vol Views on Friday. But I digress. Let's go around the horn. Mr. Uncle Mike, sir. Where should folks go if they want more Uncle Mike goodness in their lives?
By all means, follow me on Twitter at Mike TOSAW, TOSAW. Check out my website, stcharleswealth.com. Book a phone call with me. Would love to have a conversation.
There you go. Book a phone call with the man. He's fun to talk to. At Mike TOSAW on the old Twitters, stcharleswealth.com, the place to go to learn more. And Mr. Meatball, while I'm gone this week, the folks will need someone to chat with. Where should they go if they want to chat with the Meatball?
Yeah, head over to optionpit.com. I'm right now good content every day, and follow me on Twitter at optionpit for all the latest.
And we'll see. I'm going to try to be on live with the Flowmaster on Thursday, so that should be kind of fun. From the same room. That's always exciting. I get to punch Henry in the arm when he annoys me, which is always fun. So look forward to that on the Thursday show, listeners. Like I said, back in a little bit with an early edition of the Crypto Rundown, Just the Facts, ma'am. Then I'm off to OIC. We'll see what adventures await us down there. We will also, like we said, have the panel audio come in to you folks. The pro folks will get that first. TheOptionsInsider.com/pro, as well as all of my conversations with various people out there. Should be a fun time. And then, of course, back again with our usual array of content. I will be coming at you with Twifo and the Option Block on Thursday from Asheville. Back again on Friday for Vol Views. And then back again next week, another episode of the Option Block. Stay safe out there, everybody.
Most options trading platforms are commission-free, and there are some that don't charge per-contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.